Good morning. Predicted Trades family. Hope everybody's doing well. Wanted to start our prep looking at SPY and kind of the structure we find ourselves in. This is going back a few years on the daily to show, excuse me, to show that COVID dip and this trend line that started before COVID. And as you can see, when we had our COVID dip, we pushed back, we hit the trend line after getting through, then we took off to recover COVID, then we made another W, and started that big old trek up. And this year we find ourselves retracing a number of the levels that we flew up from. If we take a look at the low from June where we bounced and look left, that was this high, right? After this W and breaking out. Then if we look at the low we just recently set, let's zoom in a little so we can see. Remember that June low was here, and then the low that we just made was the next high before that. I would just point this out to say, we've come back to kind of reset the board to this W. Stopped at the first target, then the second high, and the apex of the W pretty much all right there. So we've got a good amount of support and key levels where we just bounced. And then if we zoom into where we are, there we go. These were our June lows. You can see we made a push up, came back at the end of the month, and then in June started to bounce, came back one last time, and then took off. Just reviewing this to say that we set new lows, we fought back above June's lows, and now we approach the same zones that we did before we built energy and took off again. And I point this out to say, we could be coming up, taking some breaks, and making some W's before heading higher. We could also reject, like we did before, and give the looks like we're going to take higher, but roll over and make new lows. Just so we have some context to the price action that we have seen on the daily lately. And if you look, we are in a wedge, right? We got near the bottom of that wedge, that trend line from before COVID, during the COVID recovery, and so on. We got down near that and started this nice rally. The top of our wedge sits up above at around that 410, 414, and is slowly coming down. We could also throw on our daily moving averages. To see that we also have the daily 200 above. And that's what we rejected when we got near that trend line and started this new sell-off. That's why we track these moving averages. And as you can see, it's also pretty much pulling up on 410. Not saying we're going to 410 today, anytime soon. We do have some big economic data coming out today and tomorrow, and we have FOMC next week, I believe. We'll go look at the economic calendar. But we just want to look at the structure we find ourselves in. We moved up off of those lows. We pulled back, set some new lows, but then recovered. And now we're kind of at that halfway mark. We hit it yesterday at the highs. This zone and this key level. Pretty much the halfway mark between the highs and lows. So we have to see, do we start to settle here? Do we start to lose our daily 50, come back to our other moving averages, and then start to settle in between them before making the next move higher or lower? All stuff we need to keep in the back of our minds. So now let's drop down to our normal time frames and our normal tool sets so that we can see we are in a bunch of stack squeezes. We made it up to that zone around 388 and a half, and now we've come back to the previous zone at that 381.5, holding it well. We're about to have our economic data drop. Let's go take a look at what that economic data is. So for today, we have GDP coming out, sales to domestic partners, initial jobless claims, durable goods, core capital equipment. A whole bunch is about to drop in a few seconds. Tomorrow we have PCE, which will definitely cause a reaction. We also have some spending and disposable income, and then the University of Michigan data that drops at 10 a.m. tomorrow. So 2 big key days of economic data. Been talking about it all week. Then next week we have PMI, and we have FOMC with Powell on Wednesday. Then non-farm payroll on Friday. So starting from today till next Friday, we have some big economic data coming out. And we've been getting through our big weekend earnings. Ooh, and there we go. 8:30, our economic data drop, starting to react, starting to push off of this zone. We'll have to see where we're opening, but, you know, GDP is also something that is a measurement that goes into inflation, right? And if GDP is improving, then we might be seeing signs that inflation is coming down a little. That's why we want to pay attention to these things. So let's go to ES and start to break down where we could be going today. Just like we had on SPY, and I'll just throw SPY over here so we can still see it. We had our key zone at 381.5. We're kind of pushing off of a key level here, this 38.43. Just like yesterday, opened a hair below it, then pushed off from it and got to new highs on the week, new highs on this rally. Getting almost to our key levels before pulling back to that zone. Yesterday we hit some great longs up, some great shorts back. I think it was like a 3x up. Actually, no, it was like a 3 or 4x up and then a 5x back, something like that. We do have a number of stack squeezes now. Pretty much every time frame we have a squeeze going on, according to the watch list. And we can see those here. Your 30-minute, 1 hour, 2 hour, and the 4 hour starting to form as well at the top of this daily squeeze. Down below we do have our daily 8 and daily 21, which as price action keeps moving higher, the 8 has flipped above the 21 and they're both incrementally moving higher and getting closer to our key levels. So for today, we do still have some big earnings after the bell with Apple and Amazon. But we've gotten through all of the other big names this week, Microsoft, Google, Meta, yada yada. And the market has done a good job of absorbing those pops and drops. You know, Meta dropped hard yesterday. The market just kind of held up. And held up again. So, decent reaction so far. For today, let's see if we can push from this zone again back up to these key levels and try to get to the next. We do still have our daily squeeze intact. And we are at this daily 50. We got above the daily 50 yesterday, then back below it. Right now we're rejecting it. So we have to keep an eye, even though we got a positive reaction, the market's going to do what it wants. And everybody sees this pop on the economic data and they think, okay, bullish today. So they just start loading in at open. We could see the market take a dip for no other reason, just too many people are ready to load long, so why not let them and then rip the rug and then bring it back later, right? So keep an eye on your squeezes today. We overall are in a very good bullish sentiment all around, right? We have had some negative reactions to earnings. We have had some good reactions to data. It's a mixed bag. So that's why I try to say don't come into the day with a bias. Now that we've got that economic data and we didn't tank, don't just jump in long, wait for the signs, right? Like we teach every day. So if we start to slip this zone and start to slip these pre-market lows at 34 and 30, we could get down just to test those at the bottom of this 1 hour squeeze. We start to slip those, we could be coming back to about that 38.20 or even that 38.07, maybe even that daily 8, right? Any reason to get people looking lower before ripping higher, because we have just been shooting out of the gate every morning. Now we did have big earnings that we were leading into, right? So, basically something like this could occur. We could pop up, back down, then take off, right? So we need to be ready for that. So there's some key targets to the downside that I'd like to see hold. After so many strong days this week, I'd really like to see us stay above this 38.07 if we do have to take a dip to these squeeze clouds before heading higher. But just like we did yesterday, we could push from this zone up to these key targets and beyond yesterday's high to the next key target. Just want to take a look to see that daily 200 still a great deal above, a few hundred points above, so not anything to worry about right now. So yeah, those are your key targets for today on ES. In Q, go ahead and clean this up just a little. Bunch of old trend lines can get out of here. On NQ, yesterday moved from our key level to the next key level, right back down. That's why I call out these specific key levels, and I don't have, 20 levels in between this 300 point span, right? These are the big key levels we want to watch. So for NQ today, we have pulled back to the daily 21 and 8. They are pretty much stacked on each other and about to flip today. In fact, a good test and then push up today will likely get the 8 to cross the 21 today. If not today, definitely tomorrow. I mentioned that because whenever moving averages cross, they can act like a magnet for us to come back and test them as they cross or right after they cross, and then take off higher again, or continue the trend, whatever it might be. So, today, let's see if we can hold up to these daily 21, daily 8, sitting in the bottom of these squeezes. If we start to slip those, we could slip to the through this cloud to tag the bottom of this week's range near this 11,200, right near the daily 15. we know, we are very bullish, and we can just take right off. We don't have to get down here, but we need to recognize when we have a little bit of a downtrend forming on us, right? And I know doing that negates this, but if I just connect those two, it's basically like a flat line. So I'm just going to connect the high that we saw this week on NQ to our pre-market high to give us some resistance. As you can see, we're coming right back down on that pop. We could stay below this and consolidate, or have a dramatic dip just to come right back and take it out. So let's see if we can hold up right at the pre-market lows at the 21 and 8. Start to get through this trend line back to 11,500 and try to do the same journey as yesterday. So yeah, those are your key targets on NQ. The ready. Definitely been super strong this week. You know, I think it was maybe the first, maybe YM was the first above the daily 50, but the ready's, made a great move since last Friday when it was near 1700. Now we're at 1850. If she does have a dip today, when you want to watch yesterday's low at the bottom of the squeeze and the daily 50 and that big key level of 1800. Those are supports that should cause us a bounce if we are going to continue higher. If we start to give those out, it's a little cause of concern that we're going to have a harder drop in the ready back to the top of this consolidation where the daily 21 now sits. And if we can keep pushing, the next stop is that 1860-65 where the next Keltner sits. And the daily 200 is pretty close for old ready. So she might just make the push to the daily 200, not necessarily today, I'm just saying, maybe in the next week. Make a push to that daily 200, start that pullback to these moving averages before heading higher, just like we saw in June on SPY, where it started to make the move, came back to close the month, started to make the move in July, came back, and then took off. We need to be ready for something like that. It is almost the end of the month. Monday will be the end of the month, last day. So we have plenty of reason to continue going higher on this trend, but we need to be cognizant of the end of the month, the last 2 days of the week. Things are going to get spicy, right? YM. YM so strong? Look at you. So yeah, YM was the first to get through the daily 50, been leading the charge to the upside. And the daily 200, not too far on YM. Let's see, it closed around 32,000. It could totally get to the daily 200 today on YM if we just continue to see YM pump and remain as strong as it's been. We also have the third Keltner up there with the daily 200 and the tiniest sliver of a 2-day squeeze that was starting to form up there. So big magnet, it sits up above. If YM's going to continue, that's what we're going to get to. And we could then start to see a break on this drive. Excuse me. But for today, let's get this weekend view. We've moved up to key levels, turned them into support, next to key levels, turned it into support, and opening right near the highs yesterday, but at the top of a lot of squeezes. So we could see YM hit this 32,200 in these squeeze tops and start a drop this morning that will pull the market back to 31,800 at the bottom of the squeeze before heading higher. She could just also truck right out the gate and keep going. We've got our upside target, and if we have some dips, definitely want to see it hold this 800 at the worst, this 616 at the bottom of the 4-hour squeeze. But the daily 8 and 50 are so far below, I definitely don't want to see why I'm going near there, because the market will be slipping a lot harder. Apple reports today after the bell. Made a nice push up to the daily squeeze, almost to the daily 50. And then having a little bit of a gap down this morning. I mean, you can see most of the market pretty much flat, NQ a hair down, YM way up. Apple a little bit of that gap down. Man, excuse me. Ugh, the fall always gets me like this. So, basically today I want to see Apple hold up 147.5. This daily 8 should be pretty much right there. But, you know, we fought up from 140, 141 through our zone, halfway on the journey to 150, and we kept pushing higher. Now we're pulling back. Want to see these key levels hold. The daily 8 squeeze bottom. It could set up a nice push today on Apple since they report after the bell. And they've kind of got some of the bad news out of the way by already announcing that they reduced production on the new iPhone, whatnot. So we've already had some of the reaction to reduced production numbers. Let's see how their earnings numbers come out after the bell, but she could pull the market back up if she has a nice drive today to get back up to this range. Again, you want to be cognizant of a potential downtrend that is forming, right? I'll just connect it to yesterday's high on the opening pop. So, if we can hold these key levels and start to depart them and take out this trend line, we could see Apple make a nice push right back up to the daily 50 at the top of these squeezes. And the next stop will be that 153, close at 149, can totally get there. AMD. Made it off of this 58, and the target being getting back to the daily 21 for a mean reversion after being below it. Yesterday held the daily 8 and 15, tried to get there, but squeeze tops held us back. Actually didn't gap down too much, and going to be opening near the highs yesterday, so we'll probably get that mean reversion today to 62. Yeah, pretty much 62. Retest that high. With all the stack squeezes likely coming back. But if it can push higher, ultimate goal is 65 at the next Keltner. And not necessarily saying that we get there today, closed at 59. Yeah, it'd be a little bit more than an ATR to get there today. We have stack squeezes, so we could see a little quick pop on AMD, and then it might set up a short, especially if we see the same on YM, where it's opening near the highs and squeeze tops. Could give a little pop and then come back. Amazon also reports today after the bell. Same deal. We definitely want to notice a downtrend when it's forming. So for Amazon, I want to see it hold this 113.5 at the bottom of this daily squeeze, at the bottom of these stacked squeezes, daily squeeze down below. If Amazon can hold there, it can make a nice push today, back up to the daily 21 at the top of this trend line, and if it can push past that, back through that 118, maybe even to that 120, maybe even get to that 122, close around 115, 122 maybe a little out of reach today. But we need to understand on these big names when we're starting to make the downtrend. In fact, one thing that we talked about yesterday was the ability to make a combination chart. For instance, you can just add a plus to tickers and create a combination chart. This is Apple, Amazon, Google, Microsoft, Tesla. We left out Meta for obvious reasons, right? But we need to understand there as well. when we're in a downtrend, potentially, right? And we kind of have our wedge as well from all of these recent lows. See, look at that. Perfect. So, we want to watch this wedge today. And I know this might be new to you guys, and you don't necessarily have to watch this. We'll be watching it and calling it out. But it could be a quick and early sign for, are we going to have a strong push and take off? Or are we potentially going to break down to revisit some things? And whenever you create a drawing like this, you can go to create alert with drawing. Just like we can create alerts, definitely check out create alert with drawing. I'm going to go ahead and drop some alerts on these just for the fun of it, so that the moment it happens, I'm well aware. All right, moving on. BA. So, BA reported earnings yesterday before the bell. I want to give you guys a quick lesson in earnings reaction candles, right? That earnings data came out. We had a big wick down, a big wick up. That sets the range that you want to watch. When we approach one of the one end of that range, you can expect folks are going to be sitting ready to react. BA open, pushed off that daily 50 to that high, and then you can see they started shorting because we rejected that high. 150, big key psych level on Boeing. And she dropped so hard from 150 down to 132. I know some of you folks might be saying, why does he even cover Boeing during his preps? Oh man, give me a second, guys. Let me get a drink. Sorry. I don't want to keep making loud noises, clearing myself. So, 1 second. Alright, sorry about that. And now I notice we have a spammer, so let me get rid of that real quick. Man, we got imposters dropping in our Discord. We've got spammers on our YouTube. I guess we're coming up in the world, right? Why do I cover BA? It holds a lot of weight in the market. When it's moving and dropping like this, it is hard for the market to just keep going. And we can see that drop started around 10:30, and the market started dropping around 11:30. You know, it dropped down near the bottom of this range. Around 11:30, it started to head to the bottom of that earnings wick. And that's pretty much when the market started to roll over and BA dumped harder. The market pushed up during this, but then it's turned around and everything came down. So overall on BA, let's see if we can get back up to that 138.5 today. It is on a nice steady uptrend after this big sell-off. And if it can keep going through that 138.5, you know, it's basically, can we get back to recover where we were before we reported and then gave out? That 144, 145, and then 150. Oh, looks like that daily squeeze came back to being intact since we dropped back down. Let's look at CAT. They report today before the bell. Big reaction. I've been talking about CAT all last week. That Friday move was so big coming into earnings, and she's just grinded higher through our key levels off that daily 21, through that 189, 194, and made it to 200 yesterday, pretty much. Now CAT has exploded above 200. We have that daily 200 MA right below that 200. If CAT can continue to the upside, these are the big targets. I'm not saying we get there today, more so if we continue this drive, these are the numbers they're going to want to run it back to. These are very big key numbers. From the last time, it was well above 200. So, one thing to keep in mind, we are past that third Keltner. Can we just keep pushing? Yes, especially if there's just, sentiment that people want to get into CAT to head higher. But we do want to keep in mind, we're past that daily 200. We could come back, slip 200 just to hit this very big key level. It's big and bold for a reason. And not saying this happens today, just talking about, as we move on and the market progresses over the next week or two, could see CAT come back to this key level to look like it's going to dump and then take back off again. In the time that it does that, that third Keltner will keep stepping higher, allowing it to move higher before it's past the third Keltner, which is kind of overbought. So great move on CAT and on earnings. Let's see what we get on that. Coin made it up to the top of a daily squeeze after holding this big key level from 62 up to 78. That's why we covered these things. And even in this environment lately, you can be getting some nice swing trades, right? Overall, today, let's see if it can hold 72, make its way back up to 76, 78. It loses 72, coming back to 70, 68. Google. Down hard on earnings. Just kind of hung out yesterday and then dumped with the market. And then Meta reported, right? And went down on earnings. More ad space, yada yada. Google approaching big key level, 93.4 in the bottom of the squeeze. And we have a 2-day squeeze right below that at 93. Next key level would be around this 92. But Google, could have a little dip to this 93.4 and then start to make the recovery bounce from the bottom of a daily squeeze to get back to the top. So those are some targets to the downside, and we've got our targets to the upside. GS, just continuing to pump. Been on a tear from 287 up to 340 the last couple of weeks. Approaching that third Keltner. Again, this is why I talked about, SPY back in June and how it made the push up, came back, then took off more in July. It's because some things that started to make the pop happen get to their third Keltners. They have to come back for a break before heading higher. So that might happen here in GS as it gets up near third Keltner. Just something we always want to keep in the back of our heads. But next stop, 340, 345. Not been the best mover during the cash sessions, but nevertheless, been on a slow grind up. If it rejects 340, likely coming back to test 335, maybe even 330, 325 where that daily 200 sits. And just like I was saying, things need to take a break and then head higher. GS could get to this third Keltner, pull back to these daily moving averages, this price consolidation, and then take off for more. JPM made a decent move up to our key 125, daily 200 just above, and near its third Keltner. So could be setting up potentially over the next week or two that JPM takes a break from this daily 200 and third Keltner to come back to test some moving averages and previous consolidation. Meta closed at 129, slapped 142 at the top of this daily squeeze, and down she goes to 98. I believe This is like a 6-year low. At this point, it might be even more than 6-year low. So Meta's beat up, guys, and they really aren't loving it, period. Can it start to make a recovery bounce? Yeah, but I mean, they have been beating this thing up this year. It's been sitting at third Keltner on, this entire pullback. Barely made it back to the mean and just dump. Overall, with something like this on Meta, I don't want to play that recovery pop. There are other things that are going to move better. I'd rather let this go sideways because we're going to have recovery pops and then dumps, and then it's going to figure out a sideways move before recovering. So, not touching it. Moving on. And I know you might be thinking, well, at least cover it and tell us where it's going. Personally, I'm trying to tell you guys, don't touch it. Give it time. Let it sort itself out. Microsoft made it up to the daily 50, came down on earnings. It was actually pretty decent yesterday and led a good amount of the upside. And when it pulled back, it held the lows of the day, right? Looking like it's about to open above those lows. So Microsoft, even though it's a little bit down on earnings, it had already fought up to first Keltner, almost second Keltner, top of a daily squeeze in the daily 50. This is the kind of pullback you look for to start moving right back higher. So definitely keep an eye on Microsoft around this 230, around these squeeze bottoms. If it slips them, next stop is 225, 222.5, big key levels, bottom of daily squeeze after tagging the top. But we could easily just hold up here near the middle of that daily squeeze. If we can get back above this 232, turn it into support, we could see a nice push up to 240, 241, where the daily 21 sits. Netflix. I need to speed this up because it's already 9. Netflix continuing this tear higher after the first good earnings report in a long time. And it's also going through a very large gap zone, which spans up to 333. Made it to 300 today, slipped back below. It looks like it's going to be opening near it. If we can get through 305, which was my next key levels, I don't have big levels between that and 333. Does not mean we just rip right to it. Obviously, you want to be watching every $5 increment on the way there. If it starts to lose these squeeze bottoms around 295 and lose yesterday's lows around 290, then it'll likely be coming back to 275 to test these daily moving averages, and still well above, pretty much at that earnings wick, right? We've pushed higher past that. If we start to see some selling and profit taking, it's likely going back to that earnings wick for a bounce to keep going. NVIDIA. Interesting reactions here. I'm assuming, what was it? Intel yesterday? Yeah, I think it was Intel reported yesterday. So, looks like favorable reactions in chips. We saw the same on AMD. If NVIDIA can keep trucking up, we've got this daily 50 that we're about to tap. Next stop 140, and past that 145, 147, where the third Keltner sits. QQQ. Opening near the bottom of daily squeezes. Let's see if we have a quick little dip near this 275.5, 275. We have the daily 8 and daily 21 there, like we talked about on the indices. Could have a little dip to test that, but we are at the bottom of daily squeezes, so we usually, not daily squeezes, stack squeezes, sorry. So we usually look for the long play to get back. Definitely mark your trend lines. Obviously, we need, first stop is to take out 280, and then try to make it back to 282.5, 285 at the top of these squeezes. The daily 50 sits up at about 287.5. If we can get another strong push in the market today. SPX. Had that little gap down, opened near that 38.30. Once I got my math right, I was a little discombobulated yesterday. We were in a nice steady channel as well that we slowly dripped out of yesterday in that drop. Looks like we're going to be gapping up about 10 points. Puts us back at 38.40. Let's see if we can get back up to that daily 50 and the top of this daily squeeze at open and test this channel again. Could push through it, through yesterday's highs, 3,900, 39.12, where that next Keltner sits, and maybe keep trucking. But if we start to reject the squeeze top, daily 50, yesterday's highs, could be coming back the next key level if we do start to head below yesterday's price action, that 38.15, psych level of 3,800, and then we have our daily moving averages below. SPY, pretty much covered, but in between two zones. Let's see if we can hold the bottom zone, 380, 381.5, move up to the top zone, 388, well, call it 387 up to 388.5, and 390. We are in these stack squeezes, and we do have PCE coming out tomorrow, so we could just have a range day today and move between zone to zone and squeeze top to bottom. Tesla. Little minks lately. Been talking about these big key levels, and boy, did they provide opportunity this week. Had that dump to 200 this week, right at the bottom of our squeezes, and started a push every day this week. I'm going to be opening near the top of that range. So we could see Tesla, just like the names that have been strong and are gapping up near their highs, we could see Tesla get to this, into this zone today first, and this daily 21, and then we could see some profit taking after a number of good days that pretty much have given us a mean reversion. Here's the daily 21 in the middle of our zone, our key levels. If she keeps pushing past that, next up would be first Keltner up. So, they might want to take some profit. They might want to take a little more profit back to key levels just to get people to start looking short as we break a trend line, right? Before heading higher, she might also just keep on trucking. A lot of volume and momentum coming into her lately. So, UVXY. Left our daily moving average, our daily means, daily 21, and has made its way down to the daily 50 and bottom of these daily squeezes. For continued upside, I want to see UVXY continue this journey back to 10. We have that first Keltner to the downside, second Keltner to the downside around 10.3. So for continued upside today, for a bounce, want to see this continue the journey down to 10, big key level. But if we start to see it bounce at 10.5 and head back to 11, where that daily 50 is, we could see some downside in the market today. VIX. For continued upside, want to see VIX continue this downward journey, getting back to 27 and this daily 200 at 26.5. Daily Keltner at 26. So, got these key levels below. If we are going to roll over today or see some downside today, we'll likely see VIX come back up to test 27.5, 28. And if we really see a breakdown today, back up to these key levels where the daily 8 sits. So that's it for today. Thanks everybody for tuning in. It is a free Thursday. If you're new to Predicted Trades, thanks for joining us for prep. Definitely come join us in our Discord room. It's free to get in the room, and on free Thursdays, you can test out our system and our technology on your charts. So we'll see everybody in the room today for a free Thursday. Thanks for tuning in. Good luck today. And the Beast tools will be dropping right after I kill this video. Good luck, guys.